By the way, in pre-open, a couple of stocks are buzzing in trade, and in fact, coming from the metal space, you have JTL actually. Over there, the promoter entity is infusing big money at a premium in comparison to yesterday's close price. So that's why that stock is approaching its 52-week high. It's not yet there, but almost there. I think it hit this 250, 252 mark in October. And from there, it saw a correction, but now because of this fund infusion, it's higher. And the other one is Vedanta. That one as well is up and about in today's trading session because of the big dividend payout that's come about yet again. Rakesh Arora joins us, founder at GoIndiaStocks.com, to help us out with some quick analysis. Hi, Rakesh. Good morning. Well, metal stocks have been on fire. Let's talk about Vedanta first. You always bet on Mr. Anil Agarwal coming up with the goods, particularly in the near term. Default, I think it doesn't really come about because somehow the other, whether it's dividend, some technical fees or whatever it is, but he comes up with the goods. What's your view on the stock though? Vedanta is now at 260 rupees. A couple of months ago, it went down to around 210 rupees. So at 260, what would you do?
So, see, currently there's a lot of news flow that, Vedanta might be able to tide over their bond repayments. And they are looking for a composite solution, which will take care of, even the payments which are coming up later in next year. So all this lifts an overhang on the stock, and there's just a normalization that is happening. So I would say that, probably there's still a little bit more legs out there. Also remember that they have that restructuring coming in, which can also create a little bit of hype. So I think worst is kind of a little bit over for Vedanta.
Would you be a buyer at these levels? Would you be a buyer, Rakesh, at these levels?
So Nigel, metal stocks have been making a huge, rally in the last month or so. And it makes kind of, normally it makes sense because, dollar index is weakening and you have, probably rate cuts starting next year, plus China stimulus. So all this kind of makes sense in terms of in a normal environment. But there are two basic ingredients which are missing right now. One is that valuations are not cheap, meaning investors become very smart. So the metal stocks never saw the dip normally they see during, lean season. So this time valuations are much higher. And number two, demand is missing. Despite all this hoopla and everything, the inventories are piling up and companies are not able to sell material. So I think market has run ahead of itself in the near term. Probably there will be some pullback.
Okay, all right. Well, Rakesh, I wanted to ask you about this combination, right? PSUs have been the theme to play, and you have metals as well. So if you get that combination, then some of these stocks have done very, very well. But sometimes it doesn't end very well. Nalco, SAIL, Hindustan Copper, they have been the biggest movers in the last 10 days or so. What's your view on these names? Is the street expecting some divestment, or is it purely the metals valuation play that we're seeing out here?
So, there's a renewed confidence in PSUs being able to match up their performance with private sector. And plus PSUs were always, they were always trading at a cheaper valuation than private sector. So there has been a bit of catch-up, but I think there's too much of optimism built into this. So I won't really advise investors to, get into these stocks now. They are extremely expensive.
Okay, just one final question. Rakesh, hi, good morning. On Tata Steel, it's had a fairly decent run. If you map the past 6 months, it's come back 20% growth over there. In the last 1 month, about 10%. Do you see more upsides in the months to come?
I can talk generally. As I was saying, that rally has gone overboard, and that includes Tata Steel also. So I don't really ascribe to the view that there is a super cycle or the bull market, awaiting us in 2024. So I think there will be a pullback.
There will be a pullback. Okay, all right. What about this big deal that took place overnight, Rakesh? Nippon as well as US Steel. It was done at a big premium. On an EV upon EBITDA basis, it appears it's done at around 7.5 times. But on an EV per ton basis, it's done at around $700, $750 per ton, which is actually at a bit of a discount in comparison to what some of these stocks are trading at. Any kind of read-through for Indian companies?
So, US market is a very protected market, and there's a lot of consolidation which has happened there. So I don't think there's any major read-through for Indian markets per se. I think it's it's a different ballgame altogether, US steel market.
Rakesh, since we have you on the line, we were just discussing, we had the management of GE Shipping with us on this, on the disruptions in the Suez Canal, the Red Sea, etc. It's important for container, but it's also important for products, tankers, etc. Any thoughts on what this could mean for prices, commodity prices?
So largely, I think this route is largely for crude oil, and we haven't really seen any correction, action on the crude prices as such. There's a shortage of crude tankers globally, and now with the extra miles that the ships have to travel, the freight rates can actually go up. But it's more, I think this route is more linked to energy rather than metals, because metal is largely flowing from Australia, Canada, etc., to rest of the world.
All right, Rakesh, we'll let you go on that note. Thanks a lot for joining in and talking about the metal space.